Hello, Warriors, and welcome to our viewers at investing.com today on Thursday. Hope you've been enjoying our series over the last year or so. Being here on investing.com is an honor. We appreciate the viewership, and I'm going to cover some things that are in your bailiwick. Can everyone hear me? Give me a Y if you could hear me. Anthony? Hi, how are you? Good morning. Thank you, Stel. All right, so thank you, man. So yen up here, you know, it's been on a tear, and we're now starting to get some non-confirmations here. This is a pretty long-term line that I had drawn. It kind of makes it look like a wedge. Also, I think we're so close to risk off here. Even if the S&Ps make a new high, you could see they're not confirming on the 4. They're not confirming on the 1 anymore either. So, you know, this could be a 1, 2, 3, and, you know, maybe one more push up. But I think that we're getting very long in the tooth, and I think there's more of a chance of 26 to 2,500 than new highs. So a lot of people are already starting to talk about new highs. As you can see, being equity people at investing.com, that you have the S&Ps over the 200 days, so everyone's calling this a breakout. A classic trap would be for it to close back underneath it. Comes in at 27.44, so it's not going to take that much. 27.45. That'll be your first sign that gravity still exists. Everyone with me? Give me a Y. Hi, Joan, Forex gal. All right, so part of this equation, I think, is going to be the crude. We're at a very important level in crude. As you can see, we're sitting here, tested the 78.6 last night, okay? And if we're going to fail, if this break was for real and we're not going to 58, I think we're in a, you know, good risk-reward area here. You know, to be short, stops over the high if you want to give it a lot of tolerance in case you get these intraday spikes. But as you can see, it's almost to the pip at the 61.8 level. So we'll see what happens if they could just blow through it and head up towards Andre allowed for, I don't know, 56 or so. Great presentation, by the way, by Andre. Andre also talked Dixie, and Dixie was much lower when he was talking about it. And since then, we've taken out the recent high. And now we have the potential of a 1, 2, 3 setting up. I'm thinking, but Andre mentioned 97.40 as a possible upside level to pay attention to. So that would be a great area to consider, possibly trying to top pick the dollar for a correction. Not the end of the dollar as a reserve currency, but perhaps a correction that could take it back down to 96.40, 96. The line in the sand for the bull case, and still looking for new highs, would be back to 96. And then if you had 1.618 of this, it's about 200 points. 320 from here would take you up to 99.20, just a shy under par. So, you know, that's what I'm still looking for. But it could be an interesting counter trend opportunity setting up here in the dollar. So you look at individual currencies as what would be the best candidates for that. Finally, you have the euro outperforming the pound. And looking at the euro, we are diverging here. Maybe this is 1, 2, 3, and we get one more shot down. Anyway, I think it's dangerous to be shorting the euro here, at least short term, because I think once we get a low, we'll get some type of correction. I'll have to readjust the fibs on this, but I was thinking we rally back to 13.80 or 14 if the dollar bull case is still alive. Everyone with me? And I want to congratulate Blake and the team for outstanding longs, you know, with everyone talking about trade deals and so forth, and the dollar having one more push to the upside. What a great trade selection, being long US dollar MEX by Blake Morrow. Andre confirmed it. Blake's been pounding the table on it since we broke out over the 1919 level. So tip of the hat to Blake. And if you want to know what the team is thinking all the time, you can just at least check it out and take the trial. It's $1. All right, so that USD MEX trade on a one lot would have paid for your subscription all year long. So sign up. There's a link right here in the webinar for you to do it, or come to our website, www.ForexAnalytix, and that's with an I.com, and sign up for the trial, and then you'll have access to research and ideas from the whole team. And what a team it is. I've been around the block. I've done a few rodeos, and this is the best collection of trading talent that I've worked with. And I've been doing this more than a couple years. And then after FACE, and even before FACE, and all day long, you have, you have the potential and the ability to mastermind in our members chat. Okay. And then if you want to learn about the markets, every pattern in play, or all the analysis, has the reasons behind it, which really is the most important thing. People that aren't willing to put in the time and effort, which that's the secret to this business. It's hard work, and just want to rely on a money manager or signal service and expect money to pour into their account. Sometimes that works. There are people that are good that do that. But if you want to become self-directed, you have to learn. And the important thing about, say, our pattern in plays is not just that you participate in them. Look at this. There's Blake's. Was put out a few days ago. And Grega's bearish metals here. Okay, so besides taking the trades, and the hit rate is over 50, and these guys do not put out anything that they don't think they have at least a 3-to-1 risk reward. The most important thing is learning the rationale behind it. Okay, so, and then you could go to all different time frames, and you have all these different methods. You could go see, well, what's Grega saying here? And pull up Grega's chart, and he's got the arrows. Okay, so he's looking for a bounce here too, up towards 1350, not enough, and then down under 111. That's a freebie. So I encourage everyone to sign up, at least a trial. In my opinion, and I've been around for a while, I don't really think you could judge any trader, any money manager, any subscription service in less than 90 days, because it's the long and winding road in trading every day. And you have to give it some time, because everything cycles, my friends. Okay, even the best have drawdowns. Anyone who's promising you the world and 4-digit returns, you need to run away from. And that's also our mission, is to show you what's real, so that you don't get conned by some of these hypesters all over the internet. And we just grind it out every day, and that's what it takes. So if you want to grind with us, I think it's a good idea for you to at least take the trial and navigate around our traffic light page. This is our traffic light page. So just want to show you guys that. Also, Forest Park is our sponsor here, and you could go to Forest Park for rebate checks. Give Trent or Justin a call, and that's how you could get it for free. And if any of you are a broker-dealer and you want the best research on the net, contact us here as well. And so just getting back to the markets, Blake, making new highs for the move in USD MEX. So do you feel like having a shot of tequila?
Well, we are at the 200-day moving average, so I'm gonna state that. But you said something that was really interesting. I watch a lot of YouTube. YouTube has become like my mainstay for entertainment, I think I took after my kids. My kids watch, for the last several years, they watch YouTube like all the time. They watch videos on gaming and sports and, you know, animals and you name it. They're pretty YouTube, you know, centric.
Yeah, I know. I have friends around my age that have made that conversion too. They hardly watch TV anymore.
Oh, me neither. I mean, I watch more YouTube than I would TV, and it's it's because for me it's for my interests. You know, I really like I'm a watch collector. I have been since I was 15 years old, I think. So I buy and sell watches all the time. It's like just one of my what would you say, like my guilty pleasures, I guess. You know, but I
there are worse, Blake.
Yeah, I watch
pretty tame one.
Yeah, I mean, I watch videos on like, you know, guns and shooting and military and all sorts of stuff. So, you know, all my, you know, like interests, if you will.
Right.
But you said something that was really interesting is that there's a lot of scammers out there. And because you know, obviously we host a YouTube channel, and so I'm, you know, clicking on, you know, I have to watch my week ahead video, and I usually view it on YouTube just to make sure it's not a complete crap show. Yeah, from time to time. Anyway, when I get a chance, I get blasted by these like, oh, I'm, you know, real Wall Street people, blah blah blah, and it's got guys in like helicopters and driving nice cars, and I'm like, you know, I've been to the Hamptons. I go to New York. I probably trade from one of the most exclusive currency shops in the world. Some of the best talent on the street trades in my small office, and I feel very lucky to be there.
The best do it quietly, Blake. You know, and I know you and I had this talk about 3 years ago. You know, people selling the lifestyle of private jets, and they're trading in their Ferrari and all of that, and they're $10,000 millionaires. They're renting all that stuff.
They really are, and I mean, there are you got a lot of young Wall Street traders that are the guys that are actually on the street. What it typically is a young guy that's got balls of steel because he's never known anything different, takes big bets and is intelligent and does well, and then usually they blow up, and then, you know, they find themselves at some smaller shop somewhere down the road, but they reap some good reward.
You read my autobiography.
As young guys, that's what they do. You know, it's like you're young. I was there, and I did the exact same thing. But the guys that I work with, the real guys, the real traders, they are really, I mean, granted, I'll tell you,
quiet,
these
humble.
Guys, they're humble, but man, they have more money than I've ever seen in my lifetime, and they're extremely humble, and they don't fly around in private jets, and they drive around in, you know, not Toyota Camrys, but they drive and they'll take the train like everybody else, and they are very, you know, below the radar.
They don't need the public. They don't have to put on a facade, and they don't need. Yeah, and they, you know, a wise man once said to me, Blake, he said, "Dale, make your money in a closet." So basically, it means, you know, do it quietly and without a lot of you know, hype and publicity and all of that stuff. Who cares about the fame? Really, money is the game, not fame.
You want to see how I do it, and you want to see my trading setup. Yeah. I'm going to go ahead and I'm going to put a link in the week ahead video, and it's in the chat box now. So if you guys haven't seen it, especially those of you that are new, you want to see how I do it. and I trade from home. I trade from a home office, and I'm piped in right now to my office in Connecticut, to Gellos Capital. I listen to we talk all day long. I talk with some of the best minds in the world, from a macro standpoint. I'd probably bring more to them from a technical standpoint. If they ever have questions about charts, they usually refer back to me and ask how I see things. But from a macro standpoint, these guys are the sharpest guys in the industry. And if you really want to see like how real people do business, just watch my video. And you watch the video, and it shows you my office. It's a home office, just like many of you have. We trade. And I'll tell you, I have a nice lifestyle. I'm not gonna lie that I don't. But I trade, and I trade. I'm not, I don't live an extravagant lifestyle. And even with the money that I have the means to be way more extravagant, but I don't, because as a trader, I know that you have to be humble, because there are periods, like, for example, the last few months for me, from September to January, were very tough months. And usually that's like the best time of the year for me to make. I usually make my entire year, from October, November, December, January. And these have been very flat months for me. I took a small loss last month, which I started off January just bonkers great. I ended up with a slight loss for last month, because volatility has been so low. October, November, December were very flat for me. I actually made money, but it was very flat, and not like my typical years. And I have to compensate for that lack of productivity. And that's why I don't stretch dollars like I could. I mean, I could afford a lot more, but I don't. And that's because I'm a trader, and I do what I do is because I have to save for the rainy days, and I have to save for the times that you're not doing great. So there's a lot of BS out there. I guess I'm just trying to point out, because Dale was pointing it out as well, but I wanted to take it to the next step. I mean, these guys flying around on private jets and blah blah blah, it's like, that's a bunch of crap. It really is. Anyway, so I'm going to tell you about a trade that I'm doing well with right now, is the US dollar Mexican peso. And I made my case yesterday, if you're listening on the Face webinar, why I'm long. And it continued to stretch its legs yesterday. Yesterday we broke out, we were around here yesterday, around 1925 when we broke out. We're continuing higher. Now we are at the 200-day moving average, so that you must note we are trading at the 200-day moving average. There's going to be a little bit of a stopping point here. I'm targeting initially the 38% retracement. That's where I have an order to reduce my position size a little bit. But I was talking to another trader, one of the biggest traders that I know, and again, a guy that lives a fairly modest lifestyle. I'll tell you, his house is beautiful, but he could afford more. He was a part owner in a firm that I used to trade at. He put down $3 million of his own risk capital, and his house is not a $3 million house, so he just, I'm just telling you guys that because he is a guy that he's a modest guy. And if you saw him running around on the streets of Boca Raton, Florida, you would just think he's an average dude. But he's one of the biggest traders that I know, and he's came off the street. And he's extremely, extremely well versed in the markets. I was talking to him yesterday, and him and I were discussing about the peso, and he's like, "Hey, man, the dollar Mexican peso really has the ability to trade up towards 20, 23, 24 exchange rate." And I'm like, it's funny. We were just having this conversation yesterday, and I was telling him about this gentleman Olivier, who just who left Mexico to move to France because of how much he feared the wreckage that may become of the new administrations in Mexico. And when you look at what's happening with Pemex and what the government may have to do to step in to support the country's largest energy company, the risk to the peso is pretty great. And I was looking at, obviously this longer term chart, and you have this, let's just show you this weekly chart of the dollar MEX. And I know it's kind of messy, so what I'll do is I'll do this. Let's pull it up here, and then let me get rid of these any lines that you see here. Now, this is the dollar MEX on a weekly chart, and if you look at it, we're in a basically a triangle consolidation. You can draw it like that. You can draw it like that. However you want to look at it. Okay. Bottom line is this is a very bullish pattern. This is a pennant formation in a bull trend, and we're at the lower end of our pennant. So I'm like, at worst case scenario, or worst case scenario in this, as long as this bullish structure stays in place, over the next month or two, we're looking at above 20 exchange rate, towards the upper end of this triangle. Now, if you think about what the potential of this is, let's say, the Mexican government really has to bail out Pemex, and then the fiscal policies go out the window, and they have to do a lot to support the Mexican economy. You take a rate that's already pretty high. Remember, this is an emerging market currency. You start looking at what the potential is if we get a real severe breakout. We could make a big move. Now, to carry the dollar Mexican peso for that period of time would be extremely expensive. It's expensive carrying a long US dollar Mexican peso trade. It really is, from a carry standpoint. So I have to make sure that this trade continuously runs in my favor, because I carry such a big position in the dollar Mexican peso like I am right now. It costs a lot of money to do it. So I can't sit in a period of consolidation like this for 2 months, and expect to make money as it's slightly trending higher. It has to be exploding higher like it is right now for me to do well. So I can't sit in this for a long time, but I'm trying to give you the general trajectory of the dollar Mexican peso over the course of maybe the next couple of years, which what this does is it really shapes my bias on how I really want to trade the dollar Mex. That doesn't, what I'm showing you right now is I don't want to be a short seller. I don't want to be selling it. I want to be long. Just trying to find tactical places to be long is obviously the trick. And that's what we've seen in the last, couple of days have been, and yes, I was a week and a half ahead of schedule here, but buying it out of this triangle, shoot, I didn't want to do that. Let me take the magnet off there. So as you can see, buying it through this triangle is where I really wanted to be long, and I could have waited for a week and a half before buying this thing, but I got in early. Obviously, if you're a ForexAnalytix subscriber, you seen the dollar Mex. I started trading this long on the 31st of January. So I was a week and a half early, and then right now, I exited and entered right back in on the 11th, which was 3 days ago. So I could have just skipped the whole first part of the trade on sitting in it, trying to get ahead of it. But anyway, what I'm trying to point out is that the dollar Mex has a lot of upside. And yes, we are at the 200-day moving average. You have to be aware of that. But I think that there's the potential for a lot more, especially if the market starts to show a little bit of risk aversion. Okay, a couple other things that are happening right now that I wanted to point out before I hand it over to Steve and Stelios. This euro dollar, what we did is we bounced back. See this broken trend line, this big black one right here? We bounced back, challenged the underside of that broken trend line, and failed. Now that really risks that risks a break of the 112.50 level. Now we are probing it right now, and we've been as low as 112.48. And as I told you guys yesterday, that failure up there risks a break, and if we break down, this could end up being quite a bearish breakdown. Now, it's not just the euro that I'm looking at, because I am looking at the cable that's at the 50% retracement. We're testing this breakout point, previous resistance, current support, 50% retracement. We're basically there. But I want to take you over to a chart that one of the guys in my office is like, hey Blake, is this a big inverted head and shoulder pattern of the dollar Swiss? And right here, is that a big inverted head and shoulder pattern? And I looked at it last night and I said, you know, that's not a big inverted head and shoulder pattern, because I don't like trading them as extensions. But what that is a really big consolidation, and you can trade it pretty much the same way. I mean, if the euro dollar breaks down below 112.50 and the Swissy breaks above 101, the risk of the dollar Swiss moving back to 105 to 110 is quite high. I always get a little nervous buying the dollar Swiss, because I always worried that the day that I buy the dollar Swiss is the day that the Dow drops 500 points and people want to buy Swiss francs as a risk aversion tool, and a risk aversion proxy, if you will. But mentally I'm trying to get beyond that, knowing that this is such a massive technical breakout if we break above 101. I have both eyes on the dollar Swiss right now. I have not been a buyer of dollar Swiss as of late. I felt like I've missed the boat, which I have. I mean, you know, we've gone from 96 or 97, excuse me, to 101. I feel like I've missed a lot of this move, but you know, to get that confirmation above 101, that would be a pretty bullish event in my view. So I am paying very close attention to the dollar Swiss. With that being said, I left a lot for Steve and Stelios to talk about. So Steve is back with us today. Good morning, Steve.
He's here.
Good morning.
Good morning.
Good morning, Blake.
Hey guys, how are you?
I'm fine. How are you, mate?
Good, good. So anyway, I want to pass over everything to you guys, and remember, for those of you listening in, if you have not partnered up with Forest Park FX, we've been working with them for the last couple of years. Right now, they are very much in line with our process with clients. They just want you guys to be successful, but more importantly is they want to pass on savings to you. So if you are not part of a reimbursement program where you can get ForexAnalytix for free, or some sort of cashback reimbursement if you are in the United States, make sure you get a hold of Forest Park FX. They're a wonderful group to work with. So with that being said, I'm going to pass you guys over, and
good luck today, Blake.
Thanks. Good luck, everybody. Have a great.
You don't need luck. Yeah, everyone needs luck.
Everybody needs a little luck.
I'm not against luck.
See you guys.
All right.
Happy Valentine's Day to the ladies out there.
Oh, yeah. Oh, what about my Skype to you?
I missed that. Sorry.
Hi,
he's
guys.
He's pretending that he missed that.
I know. I think he's blushing. Anyway, so what's new, Stel? Steve, you got your new car?
No, in a few days we have data in 30 seconds. So let's cover the data, and then we can. We have PPI. We have retail sales.
Oh my God!
Claims.
A potpourri.
Yeah. So
some Canadian data as well, just in case.
Manufacturing sales, new housing price index. That's true. So let's see what the market gives us, and we take it from there after the response. So let's see what we get.
All right.
Moment of truth. Any second now. Use the yen here is in the bottom right. Top middle, we have Euro USD.
By the way, the dollar max failed at the 200-day.
Okay. Oh, retail
Okay, there
sales.
we go.
Yeah, it's
Ooh,
all
retail
red.
sales minus 1.8% versus expected 0. Initial jobless claims higher than expected, 239 versus 225. PPI negative minus 0.1 for January, expected positive 0.1. So yeah, it's a sea of red actually. The only thing that beat is core PPI. So yeah, quite negative data, especially retail sales. I mean, the market is definitely going to take notice of that. The retail sales
Yen
number.
coming off a little bit. Yen coming off on that.
Same deal with manufacturing sales from Canada, minus 1.3% versus positive 0.3% expected. So definitely the data is gonna it's gonna affect the market. We already see USD yen. Let's go down to a 4-hour chart. As you see, the dollar index just got rejected from 97.20. 97.20 has been an area of interest for some time. If we check USD yen, we have a closer look. We're having a little attempt to roll over from here. Of course, it's too early to take that into account. Now, on the other hand, let's have a look at the short term again. Euro USD is bouncing here from the lows, obviously, since the dollar is getting hit. We already had on the 4-hour chart, as you see, we already had some RSI divergence taking place since a week ago. So it finally seems to be starting to work out. Now let's see what the metals are doing. Gold is jumping, and it's actually jumping from a quite nice area of support, because we've said multiple times, I mean, this move to the downside was clearly looking corrective. This is what we drew several days ago. This looks like a flag. This looks like a flag here, and gold is bouncing from it. So as long as it's holding above 1300, I wouldn't be surprised to see one more push to the upside. Silver, on the other hand, has been underperforming gold. It has already broken below this channel. Of course, that doesn't mean that it has turned bearish, because the move lower so far doesn't look that dramatic. But what remains to be the case is that gold is clearly overperforming silver. So it looks like if you want to be long one of those two metals currently, gold should be your preferred choice. No questions asked about that. We can also have a look at it in the shorter term. Here is the 4-hour chart of gold. You can see it here clearly. This move has corrective characteristic. It's slow, it's overlapping, it has retraced quite a small part of the previous move higher. So I think that a daily close above 1315 should suffice for a new high, or at least a retest of the previous high at 1325. So I think it should be worth at least $10 to the upside. Now, Coach in his introduction mentioned crude. Crude has been consolidating for some time now. The fact alone that it hasn't broken down, despite the previous aggressive move higher from 42 to 55, 56, says a lot. It means that the market remains very well bid, and I do think that a break above 55.50 should target the 127% extension of the last bearish leg at 57.80. So crude, gold remain very nicely bid, and I think that that should say a lot about the market. At the same time, the S&P has been pushing to new highs, but I have to say that momentum is clearly unimpressive. We have quite a lot of a divergence. We already have had a huge move higher. I mean, after getting the worst December since 1931, we now got like the best start of the year since like 28 years ago. So we got two extremes, and I think that it's about time that we got some mean reversion to this move as well. There's a nice confluence here of this ascending channel and the 61.8% extension of this little move at 27.74. Looks to me like a nice area to see some type of a pullback. Clearly, the market is running out of steam here, and I don't think that somebody should be buying here. Of course, the move has already exceeded expectations. There's no question about it. But as I said, there is, at least we're getting close to some kind of a mean reversion here. Coach, you're quite noisy today.
I don't think I made that noise. I heard it.
Oh, that was Blake.
Oh, that's all right.
Oh my God. I spend a lot of time with my son. I just called Blake Blaze. Blaze is his favorite cartoon character.
Oh, I see. All right. Yeah.
Okay, we see, by the way, see USD yen accelerating as you see to the downside. And if you remember, when we were talking about the USD yen, let's go back on the daily chart. When we were talking about the USD yen quite some time ago, down here, I said that, it's likely that we're going to see one more push higher towards 110, even potentially all the way up to 111.50. We have the 200 DMA there as well.
Yeah.
So to be honest, I wasn't convinced that this move higher in the USD yen should be followed higher. And I don't know if the retail sales miss is going to be the catalyst, for this rebound to stall and roll over. But it feels to me like this move higher is corrective, and I would expect at least one more leg lower. So let's see if today's data is enough to change something in the way the pair has been behaving. Now, let me open, by the way, the question box as well. Here you suggest that people don't want to hold USD Swiss short for any period of time because of carry, Blake. But isn't the USD MXN carry rate pretty huge compared to the USD Swiss? Yeah, he said so. I mean, he said that USD MXN has quite a negative carry if you want to be long. There's no question about it. Is anybody showing the Bloomberg? Yes, Telio?
Sorry, before you continue, I have a couple of things to mention.
Absolutely, as many as you want.
You started pretty fast, so I let you go.
Yeah, sorry, we had the data. You're right.
No problem. So 2 or 3 things to mention. First of all, we had Japanese GDP coming in earlier today. Japan has come out of recession, so it was a positive print, but clearly still not doing great for sure. The interesting thing was the German GDP print today, where it printed at 0 quarter-on-quarter, and Germany narrowly avoided entering a recession because it was negative last quarter.
It was minus 0.2.
Yeah. So this continues the onslaught of negative data out of the European Union, and we have to remember that rates are at 0%. This is supposed to be a time, the past few years is supposed to be a time of recovery for the EU, and still the economy is not getting any traction. And when Germany starts losing traction, then that's usually the beginning of a recession for the yeah,
that's the beginning of the end.
It's not a good thing. It's always been the locomotive of the European Union, and now it seems to be faltering a little bit. On the UK side, we have a vote today, again, another vote on some amendments that have been pushed through, but really there's another vote scheduled in 2 weeks' time. So today's vote is going to be, and apparently that vote at the end of the month is going to be the big one. So today's vote has already lost a little bit of its meaning. And what else was there? Oh yeah, we had some Chinese data. Actually, it was interesting because trade balance came out quite a bit better than expected. There was a kind of an explanation that a lot had been front loaded ahead of the Chinese New Year, but still it was a good print. And for currencies like the Aussie and the Kiwi, this is definitely good news. And the US data went through. Yeah, that was pretty much it. What I wanted to mention.
Okay. Okay. Cool. Now, anything else, Telio? I don't think we have any important data coming out for the rest of the day, right?
Today, no. We have tomorrow. I think we have. I can't remember. Retail sales. Yeah, no, today we have nothing. And is it retail sales tomorrow? Actually, I'll have to have a look at that. No, that was today. Okay, I'll need to check. But no, nothing left today, I'm afraid.
Okay,
So
okay. Let's see if the market is going to move. As I said, theoretically speaking, the U.S. has built during the past few decades an economy that's based on consumption. Such a huge miss in retail sales is definitely not a good sign, as you very well said. With in combination with the fact that the rest of the world is already in a dangerous slowdown, and we even had a period last year that US data didn't look good at all, and I think that any rebound is temporary. So I do think that we're very close to the end of this business cycle. Speaking about business cycles, let's continue on the chart by having a look at what the bonds are doing. The reason I want to do that is because I think that the treasuries are at quite an important juncture. As you see, the treasuries are clearly within a triangle, so they're coiling, and I do expect that sooner rather than later we're going to break out from here. I would favor, since it's a triangle, I would definitely favor a breakout to the upside to at least retest this 61.8. Equivalently, of course, the yields are in a triangle, which is threatening a breakdown. So as I was saying last week, and nothing has changed since then, I would favor another move lower in the yields, in essence, some kind of at least temporary risk of shift, and that's one more reason why I wouldn't be looking to buy indices up here. Actually, quite the opposite. I still have a short exposure here in the S&P. So, having said that, let's have a look at the bonds as well. The bonds have been diverging from the treasuries for quite some time now. But, we had warned about it since a long time ago. It should not be considered, a weird thing, simply because, technically speaking, that's exactly what you should be expecting, because we got a major breakout once we broke above this long-term consolidation pattern. And, there was follow through simply. And we're still, we still see that the market is buying every single dip we get in bonds, right? So we haven't had like a lower low even on the short-term scale for quite some time. So I do think that we might get at least one more push higher. There's a nice area here, the 161.8% extension of the last bearish leg, which comes at almost 168, and also brings us very close to this ascending channel. So I do think that at the same time that the treasuries might be pushing higher from that triangle, the bonds might be pushing higher towards the 161.8% extension, or even the all-time high that we see here at 168.40. So I do think that the bonds should remain well bid, at least in the short term, before we see some type of a corrective move. Now, having said that, and having covered this, let's go back to the rest of the metals before we switch back to FX. So as we said, gold overperforming silver, gold looking good. This move lower definitely doesn't look anything else but corrective. So I would keep looking higher. Not unexpectedly, what is underperforming once again is platinum. Platinum seems to be breaking below this channel, and platinum remains the weak sister between metals. And on the other hand, we have palladium, which is at highs. If we exclude that spike, we never closed there. So we've been closing to the highs lately, but momentum seems to be lacking, and testament to that is the very clear divergence that we have here in the RSI on the daily chart, right? I mean, the previous RSI reading was almost at 80, and we're now clearly trading at almost 60. So I would be quite careful here because I do think that palladium seems to be running out of fuel as well. And if we do see some risk of move, I do think that should start some corrective move in palladium, with the first downside target being roughly at 1268. This previous resistance area can turn to be support, and why not even lower after that? 1140 is easily achievable, because palladium has already had like a monstrous move to the upside. I mean, we moved from the middle of August to where we currently are. It's like 70% higher. I mean, don't be confused by the fact that it's scaled here, but we're talking about a 70% move within a period of 6 months. So yeah, there are fundamental reasons behind it that have to do with supply, demand as well. But still, it's a huge move, and nothing moves, one way, without taking a breather, or something. Now, we have some questions regarding moving averages, how to use moving averages. There are 4 different ways you can use moving averages, but in my opinion, you shouldn't be using them so much to trade, but more to get confirmation of where the trend is, and get some signals, which in my opinion, signals from moving averages alone are not enough to get you to trade something. They are, though, confirmation signals. So for example, a lot of people are monitoring where the 200 daily moving average is, because in general the 200 daily moving average is considered to be showing the direction of the larger move. So for example, if you're trading above it or clearly above it, then you're in an uptrend. If you're trading below it, you're in a downtrend. Also, distances between moving averages matter, because when you have a fast and a slow moving average and they have quite a lot of distance from each other, that shows that you have momentum. But on the other hand, the vast majority of the things moving averages show you, you can replace by other things. So for example, RSI can show you momentum. You don't need to have the distance between moving averages. Moving averages, though, are very, very crucial in the vast majority of trading algorithms, right? They do form the basis of them. So all of them use some moving averages along with other stuff. So most important is to learn to interpret price action on its own. And on occasion, of course, there are charts or there are pairs that have a habit of finding support or resistance on specific moving averages. So you might learn to trust a specific moving average for a specific pair. But as I said, it's nothing that's really irreplaceable. There is no secret oscillator or index that will make you rich in trading. Experience, proper money management, discipline is what is going to be the winning combination. Could you show me how to contact the daily blog? Sorry, do you want to explain this? What do you mean the daily blog? If you want to contact us for any part of the services that we offer, you can go to our site. On the bottom right, you can find the intercom button. Let me show you. So, no matter where you are in our site, on the bottom right, there is the intercom button. You can write something there, and, you're going to get a response from our customer service representatives. So, you can use that for whatever is the case. Okay, so having said that, let's have a look at a few. By the way, now the S&P is now negative on the day. Let's go down on the short-term chart. So the market is responding negatively here. got rejected once again from the 141.4% extension of this little move lower. So I would be careful here. Obviously, the first area of support is here, the previous highs at 27.38. So I would be monitoring this 27.38 area. I think that if we do break below 27.38, we will then be opening, more downside. I mean, even if we remain in this ascending channel, there will be a decent amount of space between there and the channel's support. So I would be quite careful. As I said, the market is conditioned to think that retail sales are super important. And, the huge miss in retail sales is not going to be, received as a good signal. It isn't being received as a good signal. Now, obviously it's a complete misconception, because the complete theory that, consumption is the basis of the economy is, simply BS, because there is no economy that can survive just by consuming, because, somebody has to produce, and an economy that stops producing is, in essence, forced to actually go into debt to consume, and that's a path that is unsustainable in the longer term. So, the whole theory about consumption is completely misconceived. But anyhow, that's another conversation. So USD yen rolling over as well, as we said. Let's see what the DXY is doing at the same time. Obviously getting rejected once again. Yeah, already quite an interesting 4-hour candlestick here. I would be paying attention to this ascending channel. As you see, we had very, very strong RSI divergence on the 4-hour chart. So this was the first signal that I was monitoring in the morning. And, I would be paying attention to this channel, because if we do break below this channel, I think that we can easily, even if we are to remain bullish, we can easily pull back towards 96.10 before seeing higher levels. You can see this even as a breakout from an expanding triangle, but nobody says that we can't come down and retest the breakout area. So that's what I would be paying close attention to if we get some follow through here. What analysis methods would you use in analyzing a market, to predict market movements and denote future movements? I've met traders that use totally different approaches, and they do very well. So it's not that important what kind of method you're using. Other people use Elliott wave analysis. Other people use basic technical analysis. Other people use, some kind of a simple index. It's important to master the method that you're using. So, have consistency, write down your performance, see what you're doing wrong, see what you're doing right, keep repeating the behavior, the trading behavior that yields benefits, and stop repeating behaviors that, statistically hurt your account. Personally, and what we propose as ForexAnalytix, our thesis is that the more types of analysis that you monitor, of course, we don't say that everybody has to know all types of analysis. That's why we're here. That's why we provide that for you, is that confluences, when you have more types of analysis showing you the same direction, increase substantially the statistical probability that things are going to move in your favor. Okay. Could you mention USD CAD? Absolutely. Let's have a look at it. Let's have a look at the USD CAD in the short-term chart. Here it is. So USD CAD. I'm monitoring this as a candidate to be a triangle. Okay. Now, if that's the case, because it's still quite early to interpret this price action, right? If that's the case, we are approaching resistance. So it would be quite dangerous trying to buy it here. Now, if we do break above this 133.30, then we're talking about a different type of formation. So 133.30, quite an important level in the market. I want to see what the market is going to do from there before I determine what's happening, because the situation is quite volatile, quite mixed at the moment. Bottom line, in the short term, I think you shouldn't be trading the USD CAD because there is no clear direction in the short term. You can see it here, right? So that's what I think about the USD CAD. Tomorrow is SOMA day. Which chart time frame is good? There's no answer to that, mate. There are no good and bad time frames. Depends on your trading style. If you're a scalper, you're trading on a short-term chart. If you are trading like, in my style, you might be trading only from a daily chart and, on occasion visit the 4-hour chart. There is no winning combination in those things. By the way, speaking of which, we are seeing some risk of, as I said before, now, we're seeing an acceleration lower, and at the same time, of course, this is to be expected. As we see, there was a small channel here that, the Aussie yen was following in this rebound. I'm monitoring that because if we do see a breakdown from this channel, I think that's also going to confirm that risk is turning lower. Equivalently, let's have a look at the Kiwi yen. Kiwi yen has the potential of producing a double top here if we get rejected from here. So what's this previous resistance, and let's see how the market reacts from there. Now we had questions about Euros, Euro Kiwi. Let's have a look at them. Euro Aussie, going back to the daily chart, by the way. Euro Aussie has broken above this channel, so far holding above it. So, not quite a clean chart, but if I had to do something from here, it would be probably to buy it, especially if we get that risk off. That should help the Euro Aussie do better, because Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, they tend to do well when we have risk of environment. Euro Kiwi obviously messed up this formation after we got the big jump in the Kiwi. So this was purely a product of the bounce in Kiwi. So obviously, if you're looking for a move higher, the Euros seems like the safer bet, especially if we consider the fact that, and if you remember, I had warned about that for quite some time, that the Aussie Kiwi has been breaking to the downside once again, which in my opinion opens the door for more weakness towards parity. So Aussie Kiwi remains clearly bearish, and as long as that's the case, you should be favoring the Kiwi if you want to be long one of those two, or you should be favoring the Aussie if you want to be short one of those two. Yeah, my pleasure, mate. Hi, can we have a look at the Nifty? Yeah, absolutely we can. Here it is. Nifty. As I was saying, you can even draw it like that. The Nifty was clearly misbehaving, having to do with momentum, simply because we had quite a strong move lower, right? You can see it here, quite a strong move lower, and even if this is corrective, I would expect one more leg to the downside, because at the very least this should be like an A. This has clearly corrective characteristics like a B, and I'm missing a leg here. So I would favor the downside here, especially if we clear this 10,600 horizontal support area. I think that that will open the door for at least a retest of these lows at 10,000, if not a lower low, which is quite likely. Okay. Did you look at copper? No, I didn't. I will gladly do that, although I don't have something to add because nothing has really changed here in copper. Copper remains trapped in a rectangle. We have a resistance area here at 287. We have support area here at 257. So we are oscillating in a 30-cent range. And whichever of these two breaks, whichever of these two trend lines break, I would expect a 30-cent extension, okay? Because a rectangle should produce an extension equal to its height from the technical analysis theory. So you have two options in every case that you are in a range. Either trade the range, which means sell prices close to resistance or buy prices close to support, or wait for a breakout and sell a breakdown or buy a break higher. Coach, I hear you breathing, so that made me look at the clock, and that made me realize that it's time for you to start your interview with Kirk. Am I right with that?
How's my respiration?
It sounds excellent for a not that young dude that had pneumonia some time ago.
Hey, buddy. Great review, Steve. All right. So, everyone, if you're interested in oil and oil-related assets, you're in the right spot. Kirk Spano's with us. So a lot of interest in oil with what's happening in Venezuela, and some hawkish comments out of Bolton yesterday about Iran. And it's great to have Kirk Spano back with us. Kirk, welcome back to the jungle, buddy. Just passed you the controls.
Happy Valentine's Day.
Oh, thank you so much. Will you be my Valentine and break crude to $48 before it goes to 68?
Yeah, man, I will. I love you, man.
Your stuff has been great. Perfect time to talk to you. It's always a good time to talk to you, Kirk. But why don't I start off with?
I have to go because I have a wife, and she's gonna think that something weird is happening here. Yeah.
All right. Well,
I'm gonna leave you to your love here.
All right. I love you.
I love you too, Coach.
Like to the marrow of my bone, man.
But in a platonic way. In a platonic way.
Yeah. Oh, yes. As soldiers, like Greek soldiers at Thermopylae.
Right.
How about that?
Yeah. I hope we don't have the same ending.
All right, Kirk. So back to business. Were you surprised by the magnitude of the decline in crude oil prices this fall with the equity markets? And now we've had a recovery here. So how did you manage that decline in crude, and what are you thinking now after this rally? Curious.
Right. So can you see my screen right now? It says fourth quarter macro market outlook. All right.
Yeah.
So
you write a lot of great articles.
I try. I goof them up from time to time. So in this article, I basically talked about why we were going to see a fourth quarter decline. And we went into that correction heavy in cash, and we also had hedges on IWM and SPY. We sold them way too early.
Okay.
So
it's hard to be, I say it's hard, we always have too much on when we're wrong and not enough when we're right. And then we always question ourselves on exits because, we would like to be perfect, but, man, you can't expect perfection at the craps table. What do you think?
Yeah, no, I think you're right. Sometimes the dice go against you. And in the fourth quarter, I've been trying to explain what happened in the second half of the fourth quarter, because I really thought the buybacks would kick in. But there were a couple of factors that offset that. And one of the things that I think people completely overlook is the money flow into and out of the markets. And in the fourth quarter, particularly late in the fourth quarter, we saw a record number of hedge funds liquidating on top of tax loss selling. So not only did we have the Fed pulling $50 billion a month as of October out of the markets and the economy, because most of that money does trickle into the markets from the Fed. But we also had the tax loss selling because people had gotten beat up early in the year and probably were scared and didn't make their money back. And then we had really a record number of hedge funds liquidating. So there were massive amounts of money that were flowing out of the market. And this is on top of the long-term outflows from the markets, which are driven by long-term demographics. Because now we see, if you look at Yardeni, pension funds are in decline, right? Because pension funds aren't really taking in much money anymore because young people don't have pensions. So as the older folks, as people retire, I don't want to call people old. You know, I'm almost 50 now, and I feel like I'm rounding second base. But you know, the pension funds are in distribution, so that is a long-term drawdown of money that would otherwise be going into markets like it did for decades. So we have
did they also exacerbate the problem with pension liabilities because interest rates have been so low, Kirk, that they've had to go out and do some esoteric things that may have suffered hits during the fourth quarter, the worst December since 1931?
Yeah, the pensions are in bad shape, right? So we believe that pensions are underfunded to the tune of $4 to $6 trillion. And
not enough by that insurance that we have for the pension guarantee, whatever it is.
No, we're short $4 to $6 trillion. You know, on top of what the government's already set aside. So I mean, in fact, that led to a interview that I gave where I said that helicopter money is inevitable. There's no way to fix the pension system without just printing the money. Otherwise, you'd bankrupt everybody trying to fix it. So eventually,
you ever been to a retirement dinner for a trader? You haven't.
No.
You haven't. You haven't.
Tell me about
it. No gold watches for us, buddy.
No, yeah.
So we just have to accumulate the shiny stuff. But
right.
Yeah, so we have a pension crisis going on, and do you think that is the Fed still? I believe they're still, even though they have been more dovish, Powell's been more dovish, they're still moving ahead with QT. Have they lowered the amount coming off their balance sheet since Powell made the dovish speech about a month ago?
Not yet, but if there's a chink in the economy, and I don't mean that to mean Chinese, but maybe I do.
Okay, well, you know what, Kirk, maybe it's not that they're data sensitive. Maybe they're S&P sensitive. And they don't want to, they're not going to have to do anything until maybe we take out the lows of December. Then maybe they'll do that. But it seems like, just like predecessors, that they can talk hawkish when the market's making all-time highs, but after a 10-20% pullback, they pull in their horns and, they pull in their claws and put on their horns and create a bull move. So do you think the Fed is done for the year?
I do not think they'll raise interest rates before December. Well, they might raise in December, right at the end of the year, if things are going well. But I think that there's a scenario out there where you see an extension of the I've been talking about these China trade talks as a binary event. If there's a deal, you're going to see the market roar, you're going to see the economy continue. But if there is no deal, you're going to get the opposite. And, I think the highest likely scenario is that Trump takes a deal, China gets more of what they want than, Trump would like to give them, but it won't matter because Trump will say it's the greatest deal ever, and 40% of the people will believe him. So, I think there's going to be a deal with China, and I actually think that things go pretty well for the balance of this year. However, I don't have real high conviction on that because I think there's a very good chance that President Xi is so irritated with President Trump that he buys the things that he needs, soybeans, oil, gas, up on the front end. They get an extension to finish up a deal, and then they end up not finishing up the deal. And that could happen sometime over the summer. So we just have to keep an eye on China and trade, because as we know historically, if trade goes south, global GDP goes south. So we'll have to see what happens there. I wish I could give you a divine answer as to which way that would go, but I don't think it's much better than a coin flip in either direction, whether or not there's a trade deal. But we're, as traders, as investors, man, once we have that information, we better adjust quick, because negative news on trade is negative for everything.
Is it possible it turns out to buy the rumor? Because, I mean, everything floating out, Kudlow, we're making progress, Trump, things are looking good. You know, it's not the sentiment out there. It looks like something's going to be done. Is it going to be buy the rumor, sell the fact? Because people may look at the deal and know that it was just symbolic and really didn't accomplish much, and that we're probably have more issues that could reemerge if it's just a cosmetic type of trade deal?
You know, maybe, but I've been working with a lot of millennials who are starting to be investors, and I've been, you know, taking in big clients again because they've asked me, and why won't I take the money? But you know, I've been talking to some pretty interesting people. By the way, I'll be out in New York in March when you're there, so I'll see you then.
Oh, go see the guys. Yeah.
Yeah, but I don't. I think you could be right, but it could go another direction. I think that there is this account. I've been driving coast to coast, and I was just down in Florida. I'm telling you, this economy is huge. I mean, we have 7 million job openings and only 6 million people to fill them. And we've got 500,000 millennials, men, that won't take them. So this economy is really, really strong, and it's going to take a lot to break it. I'm not saying that it can't be broken, but it's going to take a lot to break it. I think people are underestimating it, and you know, from the bottom up, the economy is doing better. Now, how does that impact the markets? Hard to say. Again, there's drawdowns coming out of the markets because of the retirement situation, and the millennials don't have the money to offset. You know, to put in and offset what the boomers are taking out. So we have to look at those ebbs and flows, and that's where the technical trading comes in. I use money flows. You know, I'm a big Chaikin money flow guy, and you know, a little bit of MACD, but really I watch money flows because it's just supply and demand, right? Mm-hmm. And I've talked about this Powell put. I think it's a lot lower than people think. I think that he's more concerned about the economy. I think he's very straightforward when he says that. But I don't think he's immune to supporting the stock market. But he's certainly not going to support it the way that, you know, Janet Yellen did when she said, hey, it's good for America for people to have money in their 401k. You know, Powell doesn't quite see it that way. He leans in that Austrian direction, whereas, you know, Bernanke and Yellen were definitely, you know, very Keynesian. So you have to understand the different philosophies of the players. So while there is a Powell put, it is not nearly as strong as Yellen and Bernanke. And I think that we have to be careful of all these things. I think this is the least certainty that I've seen in a very long time, a decade for sure, right? So, you know, I did a whole piece on where we are now in the markets on my YouTube page, and you know, you can get a deeper view there. You know, if you wanted to talk currencies, which I know that you guys do, I way back in 2000.
Yeah, you've been a dollar bull for a long time, Kirk.
Very, very long time. And I think that given that we are the cleanest dirty shirts, right? Our retirement demographics and problems aren't nearly as bad as Japan, China, or Europe. Our obligations are more fully funded. And ultimately, I think that the United States becomes because remember, supply chains are moving. So ultimately, it's going to come down to the strength of currencies, who's got the strongest standard of living. I believe that the United States is going to become a giant Switzerland, except that we'll produce things. And in particular, for the next 50 years, we'll be selling natural gas and food. So
well, I wanted to get to that, Kirk, because you know, NG Natty's pretty cheap right now. Yep. And I've seen some long-term cyclic work that point towards in the next year or so astronomical nat gas prices, probably dependent upon us being able to export to Europe. And, you know, the spread would narrow between what they pay over there and what it costs here. And I was wondering what kind of candidates you might have. I know you made a great play in Chesapeake last year. They have some issues. I'm wondering if you still like that or what you're looking at for nat gas going forward.
Well, as you may have noticed in the tabs, I do have something teed up for you at the end.
Oh, okay. All right.
So you know,
hey, no mulligans, man.
No mulligans. Yeah, you know, that Chesapeake trade was awesome, and you know, because with the options that we used, you know, it was what was a 40% move in the stock, so the options were up to 300%.
Yeah.
You know, that's a good trade. I think that there's a lot of value in the oil space. If you take a look at the comparison charts, and I don't have one up right now, but if you take a look, energy is clearly where the value is. And I have an article going out. Yeah, I would like to get it out today, but I got to take Grandma to bridge, and then I got the girlfriend, so I'm not really sure how this is going to happen. But I think that the value in energy is very simple. You want to find companies with good rock, right? They have good acreage, right, and they have good balance sheets.
Yeah, not a lot of debt.
Right. So that knocks out 75% of the companies, because some of the good balance sheet companies have bad rock, and some of the good rock companies have bad balance sheets, and they'll get taken over. So, and they won't get taken over with big premiums because their balance sheets are bad.
They're more or less being rescued.
Right, right. So you have these
bought out for the assets, not the company.
Right. You have these mergers where it creates economies of scale. You know, they get all kinds of synergies, but it's necessary, right? It's necessary because their debt's so high that even if they get a decade of profitability, it would never pay off the debt. And then what happens in 10 or 15 years when oil demand falls? You know, then they're in big trouble. So, you know, let's keep telling the story. Going way back to 2014, 2011 and 12, I called the shale boom. 2012 to 2014, I was talking about how the dollar would be strong, why it was going to remain the reserve currency for all the way through my children's lifetime, and people didn't want to hear it. And yet the dollar went on this big bull market, had the little pullback, and now it's getting strong again. Will it pull back? Sure. But in general, the dollar is going to stay very strong for a very long time. And, you know, you hear the criticism, well, the petrodollar is almost over with. Kinda. The petrodollar, based on Saudi Arabia requiring dollars to be used in oil trades, is probably getting close to being over. But the fact that we export oil now, you know, so we're replacing that. I have a chart up on that too. So, you know, there's big growth coming because the United States, in an era of massive technological change, moving supply chains, in an era where the middle class of the planet won't grow as fast, in an era of climate change. And I know that some people don't want to hear about that. I don't care. The world's changing. Whether we're causing it or not doesn't matter anymore. The fact is that the climate's changing, and farmland is becoming difficult all over the planet. And we still have some of the best farmland. We have the resources to irrigate, and then now we're an energy exporter. So there's big growth coming in the United States, because imagine water, food, energy are necessities. People can't do without those. And if we sell them food, water, energy with strong dollars, right, we're getting a whole lot of value for what we're going to sell. So even though we won't export as many cars or we won't export as many widgets, it doesn't matter, because, you know, those supply chains are moving anyway. We're going to supply a lot of raw materials. And as investors, we should be looking for the countries that can do that. You know, if the oligarchs in Russia ever stop pilfering that country, Russia could become an amazing investment. But, you know, they're just going to keep stealing as long as the people let them. So we should keep a look on those big trends, and we need to understand that with oil, because we want to talk about oil here, is that there is a developing balance between oil supply and demand that will last a pretty long time. And I started talking about that way back in 2014 when I was telling people to get out of, this is the article where I told people to get out of oil investments, 3 or 4 months before Saudi Arabia did what they did. So I have a whole series you can take a look at, peak oil. Just put in peak oil plateau and you'll find these articles. I think we're getting to the point where the Goldilocks moment for oil is almost here. I talked about it a year ago, probably right before I was on here, and I talked about how $80 a barrel oil seemed to be that Goldilocks price. Maybe it's 70. I don't know. Maybe it's 90.
Well, we got there after you talked about it. We got to 75.
Yeah, we got right. We got almost there.
It couldn't hold it.
Right.
Yeah.
And the reason it couldn't hold it is because Saudi Arabia and Russia increased production at the behest of President Trump. President Trump ended up lightening the sanctions on Iran. I don't think those sanctions are ever going to get tougher than they are right now. So, and then you have the Europeans who are figuring out ways to go around it. The Chinese are going around it. So you bring Iran up, and we've talked about it a lot in our past interviews. Is any type of intervention, military intervention, off the table with Iran because Venezuela is a softer target? That's one way to look at it, right?
That's the way I look at it. I mean, look, just like the Gulf War, the Iraq War, the axis of evil, that was the easiest target.
Well,
but, North Korea would have been a tougher target than Iraq back then.
Okay, so let's unpeel a couple layers of onion. Take a look at the U.S. refining system. What do we need? What do we have versus what we need? We have lots of light sweet crude. What we need is some heavier stuff to mix it with. Just because you can't rebuild all these refineries quickly, and why would you stick money into new refineries when, 20 years from now you probably won't need half of them. So
Venezuela is the sour.
Yeah, they got the heavy stuff, and I think that you're going to see Exxon and Chevron back in there in the next year or two. We'll see what happens with Maduro, but
they'll be fighting Russian and Chinese oil contractors in there.
Yeah, and why not get militarily involved with a South American country that'll love you for it? Instead of building a pipeline from Canada. I mean, gee whiz, a pipeline from Canada, that's a horrible idea when we can go to war and occupy a country.
Yeah, okay. So you don't think it's that far-fetched?
I don't think it's that far-fetched, but I think that by 2021, the powers that be will not be the powers that be. So I think that probably you see a whole different mindset. And while there's going to be constant pressure on pipelines, the fact is that we need a few more. And why wouldn't we be nice to Canada? I think it takes an idiotic mind to not treat Canada as a very valued ally.
Yeah, they've been in the trenches with us in every war we've been involved in.
Yeah, it's
every war.
Yeah, no, look, man, I'm not gonna. I know people love some people love President Trump. I'm just saying that it doesn't make sense tactically.
And they make Moosehead beer too.
Yeah, they do,
and Crown Royal.
Yeah, and they guard the border with pylons, and that's nice.
Yeah.
And so anyway, here this is important because we're right on top of it. So the Saudis have dramatically cut production and exports. Canada has cut production to bring their inventory down, and we're starting to see inventories right here
tighten up.
Starting to see inventories tighten up. So what was it? There was a API last night just gave a surprise drawdown. We'll see what EIA does. That's coming up. But the bottom line across all this is that there's going to be a balance between supply and demand. It doesn't matter if the senators pass NOPEC, right? They can pass NOPEC all they want. They're 20 years too late. So with the United States being where we're at on oil production, with Saudi Arabia asserting itself a couple of weeks ago saying, look, we're going to control this market. We're going to be the last one standing. Deal with it. I mean, they told us. They said something that I said 2.5 years ago on Market Watch that they would eventually say. It took a lot longer than I thought. But Saudi Arabia finally said a couple of weeks ago, hey, we're going to be the last man standing. Just get out of our way. And if you try to compete with us, we'll crush you. They came out and said it finally. So they want oil in that $70 to $90 range. I think that's going to be the range. Probably closer to the bottom end, except when there's a hot economy or tension. But, you know, you could see spikes. If there is actually a war in Iran, and I still think there will be a war in Iran, I think it'll have a lot more to do with the Israelis getting irritated and with some sort of counter-revolution over there. But, you know, who knows when that'll happen. The Ayatollah has to die sometime, right? So whenever we hear that he's on his deathbed, get ready. So all told, the United States, and I wrote my first Freedom from OPEC article back in 2012, that it was going to come by 2019. So in 2012, I said 2019, based on my models, plus or minus a year, it's going to be the year that we are free from OPEC. What happened very late in 2018, we had a touch of that, pulled back a little bit. By the end of this year, once those Permian pipelines come on, we won't need OPEC anymore. We'll still trade with them a little bit, but it's going to be more of a diplomatic thing than, hey, we need your oil. So,
well, that is a major paradigm shift, considering, you know, all the aggravation and blood and treasure that's been spent over there for that reason, that
right.
We no longer have that reason. So, yeah, that, you know, that is a great reason to be optimistic about our country. So,
it's why the dollar will stay very strong.
Okay. So a lot of people think that the dollar being too strong is going to be a problem for a lot of markets. They're deflationists. The difference between you is we could have a strong dollar and still have bull markets in certain asset classes like equities, even though we have a strong dollar. Is that correct?
It'll be certain things, right? So I wrote an article telling people to get rid of grandpa stocks, and I have actually... You know, if you want to get
a new website, Bluemont Asset Management?
I did. I rebuilt my website because I've been an oil guy since the 90s. And normally when you're an oil guy, you're an oil guy, right? But to me, I've been waiting for this day for a very long time. We are on the cusp within a couple of 2 to 6 years. We're within 2 to 6 years, depending on how elections go, of a major paradigm shift with energy policy. And that's why I don't think the United States is going to make all that much money on oil, because it's not going to be a 20, 30, 40, 50-year thing. It's going to be about a 10-year thing. And we're going to get about 10 years here where we prepare for this whole change, right? This whole combating of climate change. I'm so convinced of this that I changed the nature of my firm. And do
you know that I've interviewed and read some people that have the exact opposite view based upon sun cycles and sun activity, that they say we're entering a period of global cooling that could be like a mini ice age like we had many years ago? So what do you think about that? Is that crazy?
I've studied that extensively. You know, and remember, I was a science guy in college.
All right.
We're going to get we're at the bottom of 2 solar cycles, or we're entering the bottom of 2 solar cycles. However, because we're retaining so much heat, all it will do is be a short-term offset at the bottom of the mini solar cycle. So will we get several cold winters? I think so. I'm in Wisconsin, and I can tell you, I did not want to go outside for part of January. But the reality is that that has nothing to do with climate change, right? That is just a normal part of the cycle. The normal part of the cycle you cannot change.
Right.
But there's other parts of the... Yeah,
okay.
We're changing the whole CO2 and methane structure of the atmosphere, and we are potentially, this mini ice age might buy us some time, right? And it's not going to be like the mini ice age when we wiped out half of the people and trees on the planet. So the last mini ice age was also man impacted, very largely man impacted. That was just in Nature, I believe, Nature magazine. So, you can talk about the solar cycle, but when you take a look at it over millenniums, you realize, well, there is a natural range, and we're probably moving to the cooler end of the natural range. But then there's the offset for what we're doing to, the climate. So, what happens in 20 or 30 years if we haven't used this time period to fix things? Well, I could tell you it's a four-letter word that starts with an F and ends with uct. We're in big trouble for our children and grandchildren if we don't take the next couple decades to fix things. And so that means weaning ourselves off of fossil fuels. That means finding alternative energy. Solar. I don't understand what people don't understand about solar. You don't use a lot of solar panels to provide energy for the whole world. If you put I believe it's 2 mile by 2 mile solar plant in the Sahara Desert and ran a wire to Europe, you could power Europe with it. So it's not like you got to cover everything with solar panels like some of these guys say. But the change will be slow. It'll be rocky. We're still in the old paradigm. We're at the cusp of change. And how long does that change take? I don't know. But I will tell you, as traders, if you can clear your mind of ideology and stick with your technical indicators and understand that there's going to be some amazing swing trading opportunities and position trading opportunities, you're going to make a lot of money. So, if you want to follow anything I'm doing, this is the website to come to. Just Blue Mound AM. I've got all the links out. You want webinars, you want articles, you want to follow me on any of these places, all the links are here. So just bluemoundam.com and you can find me. And that doesn't mean that I'm going to be right about everything, but, I've had a pretty good track record, and people are starting to call me a futurist. I don't even know what that means. I'm just trying, what I'm trying to do? I saw a cartoon when I was early in my career, and it was a client talking to a broker, and what he said? He says, tell me what I'm going to wish I had bought 5 years from now.
Yeah.
Right? 5 years in the future, tell me what I would have wished I would have bought today. And that's all I'm trying to do is, what would I would have liked to buy today if I knew what I'm going to know in 5 or 10 years?
Yeah, if you had a newspaper.
Yeah,
5 years in the future. Yeah.
Right. But you guys are traders.
How about 6 months here? 6 months with the energy. You said you had a slide teed up. Why don't we get to what really everyone it's all about making money now. Kirk,
right.
What are some of your ideas with this recent recovery and possibly natural gas? You think natural gas will be phased out just like all the other fossil fuels because it is cleaner burning?
Yeah. So natural gas is going to be around a very long time for two reasons. One, it pollutes half as much as coal.
Right.
So a lot of coal is about to get replaced by natural gas. I mean, we already know that's happening. But there is a technology now for methane and CO2 capture that will turn that into plastic. So we can put this technology on farms. We can put it at waste treatment facilities, at dumps, and at natural gas power plants. So this new technology, which Coca-Cola and some really big petrochemical companies or one really big petrochemical company are already using to create plastic, right? If you drink a bottle of Coca-Cola, that bottle may have already come from a non-oil-based petrochemical. So that technology, which is why I know there's a lot of people who are real high on petrochemical investment right now. Not me, man. I'm going to be selling that and shorting it soon because petrochemicals are in big, big trouble from this new technology that has massive investors. Check out New Light Technologies down in California. And if you figure out a backdoor way to invest in them, let me know. Because I think it's going to be a super unicorn. I mean, just check it out. But
Okay.
But natural gas is going to be around because technology like that, and somebody will copy it and make something similar, is going to be able to make natural gas almost emission-free. So natural gas will be around a very long time. Encana is my Chesapeake of this year. I think that Encana is dramatically undervalued. I think that people are completely underselling the merger with Newfield Exploration. I think the analysts have this one wrong. Frankly, I think we know that the analysts are usually wrong, and they're really wrong on this one. Encana is going to be one of the 3 or 4 premier unconventional shale oil and gas producers in North America going forward.
I still follow that one.
Yeah, and they went all the way up to where I said they would, and now they crashed all the way back down with the fourth quarter sell-off. Yeah. These guys have 3 premier assets. The rest of these assets are probably going to get sold. So Williston might get, their Bakken assets might get sold to Continental or Chevron or Conoco, whoever. They're going to sell off all these assets to other players who can bolt them on, because all this consolidation in the industry is necessary, like we talked about. And now you're going to have a company like Encana that has massive assets, Montney, Permian, Anadarko, natural gas, oil. And they are going to have these huge pieces of cash dropping to the bottom line. These guys are already reducing debt. They're already buying back shares, and they're already paying a dividend. I think that this stock can go all the way back to its highs this year, right? So all the way back up to like 14.
Again? 14, yeah, and it left a gap on the way down. Was that the acquisition that people didn't like when they hammered it?
I don't know if that was the acquisition or if that was just Q4. I mean, they coincided, right? So the acquisition was in November, and the market fell apart the whole quarter. Okay. So it could have been both. I think by date it was probably the acquisition, but the whole quarter sucked. So this company is going to have literally a couple $2 billion drop to the bottom line as they sell off these assets. I think you're going to see oil continue to go up towards that 80 again. Do we get there? I don't know. It depends on the trade deal. But this is the company where I think if you want to make a trade, go take a look at your technical indicators now. There was a little retrace after a little bit of a head, started to get rolling, a little bit of retrace. And I think that these guys are in that spot where you can start taking positions. And if you use the right...
Okay, a member of our community... options on Encana. Someone in our community wants your view on Oxy.
Occidental Petroleum. So they're my favorite dividend-paying oil stock. They are big in the Permian. The article that I'm writing is going to talk about only invest in companies that have significant Permian operations. Well, Occidental is second or third biggest Permian producer, and they also have a carbon capture, a carbon mitigation business, and that's going to be a very big deal in the future. They were smart enough to sell off their export facility at probably the high-ended price. I think that their management might be the best in the industry, to be honest with you. And that's the stock that I tell people, sell Exxon and Chevron, because they're just never, ever going to get to debt-free, and those companies have to break up at some point. Occidental is the one that I say, look, if you want dividends from the oil patch, buy Occidental. Not a real big growth company. I mean, could it go back to 100, 120 at some point? Maybe. But I think it's a company that you buy as a steady Eddie portfolio anchor.
Okay. Got it. All right. Anything you want to wrap it with? Another great conversation with you, Kirk.
No,
I
get so much out of listening to your interviews. I tell you what, the copper and gold that you guys were talking about earlier today.
Yeah.
I think the gold is a range-bound asset. I don't think it goes much higher or much lower, but it's it's a fun one to trade for sure, right?
Yeah.
Because you don't ever have real big risk, and every now and then you get a pop. Copper though is the one I've been watching, and I think that with the 5G world coming, with the IoT expanding, with the new batteries for cars. I mean, I don't know if everybody's aware of this, but the new battery technology is copper-based, instead of lithium.
The lithium. Okay, so they're moving away from lithium to copper. Interesting.
Right, because lithium is toxic and expensive. Copper, is easier to get. There's a lot more of it, and it's non-toxic. So
are you going to play it with things like Freeport, or you have some other ideas?
Freeport's the one I was just looking at, but you have to take a look at some of these South American countries that have gotten the snot kicked out of them, and hope that you can buy them cheap, and that the countries don't screw them up. Right, so because those stocks have so much upside, but you do have
political risk.
Yeah, you have a lot of risk.
Yeah,
so,
they could nationalize them. There could be all kinds of problems there. So, is Freeport anything?
Small bites on those foreign companies. Small bites.
I think there was one COPX. Isn't that a copper stock? I forgot what it's called. Or CO.
It sounds like a fund, but I'm not positive.
Oh, okay. All right. So you bullish copper, and you're still doing the research to filter out candidates for that.
Yeah, Freeport McMoRan is the one I've traded a lot in my career. I mean, all the way back to the 90s. It's been a long time, but I think it was called something else when I started. But was that pre-merger? I'm not even positive. But Occidental I've traded since 1999 too. Okay. So I love Occidental. They've been through some phases. They sold a lot of foreign assets. I think that's a company, like I said, that's a core holding for people who aren't going to trade much. But Freeport, you've seen some of the massive moves in Freeport over the years.
Yeah.
We might be on the verge of another one. We have to try to figure out where the buy point is, right?
Okay. That's the art of it.
Right.
It's not the if, it's the when.
Right. And so a lot of what I tell you comes from Warren Buffett saying, I can tell you what's going to happen. I just might not be able to tell you when. And that's the hard part, and that's that's the hard part. I watch what you guys do. I pull up these videos on the weekend, and I'm just like, huh. And they got another one right.
Yeah.
So,
thank you, Kirk.
It's
the best team. Very good team. Very good team. So, are you a subscriber?
I'm not, because I don't do any of the kind of trading you do.
Oh, okay. All right. Well, maybe,
I don't need it. I don't need it in real time.
All right. Well, Kirk, thank you so much for coming here and once again edifying the FACE community on your views macro with some, shorter term stuff for us to consider. And I encourage people to follow Kirk on Twitter. He's very insightful. He's a futurist now. And you can find him at Kirk Spano, and his website, what is it? Blue Mound Asset Management.
Yeah, BlueMountainAM.com for short.
Okay. So, Kirk, good hunting, my trading warrior brother. Thank you so much for hanging out with us again today, and great conversation.
Yeah, always love being on.
Okay, well, we'll get back together sometime in the spring, see what's happening, and you can update us on, any new developments that you see occurring here. Okay, buddy?
And I will definitely stop by and visit you at the Traders Expo in New York on, March 10th? 11th?
I think 10th through 12th. Yeah, I'm not going to be there, but most of the crew will be.
Okay.
So, it'd be nice for you to meet Steve, and Greg is coming in from Europe, Steve from Greece, and Joe Perry, who lives on the East Coast. So, are you a speaker there? You're just going.
I'm just visiting, and I invited my girlfriend so we can go see Harry Potter. But
Okay.
so Joe Perry, the guitarist, is that who?
No, he's not from Journey. He's just on a journey with us here at ForexAnalytix. All right, bro.
All right. Take it easy.
All right.
Happy Valentine's Day. Buy somebody something nice and say something sweet.
Okay. Thank you, Kirk.
Take care.
It was great talking to you, buddy. Adios.
Bye-bye.
All right, Face, that's a wrap. Remember, don't just count your pips, count your blessings. In members chat, this interview is recorded and will be out on Twitter in a few hours. So see everyone for wrap-up TGIF session tomorrow. Adios. Thanks again, Kirk.